Hey guys, how y'all doing today again? This is our third video for today. We just kind of entered the last hour of trading, so that's usually when things start getting exciting, especially at the end of the week. I just noticed a few things, so I just wanted to share those with you. You're looking at the S&P 500 index right now. For trading purposes, though, I like to use the ETFs, so I'm just going to switch over here to SPY, which is the biggest one. It is similar. It is pretty much divided by 10 the prices, anyways. So a $2,500 index is a $250 ETF, roughly. Okay, so right now we're at 257 and change. We went down a little bit earlier today and tested that 200-day moving average, which was about 254. It held so far, anyways. The one thing I wanted to point out here that I noticed that's kind of getting a little bit, I don't know, not troubling, but it's raising some caution here, is this this right here. Notice how this volume is getting up and up and up, it seems like. So we have a lot more sellers coming in as we hit some of these other levels that are a little bit more significant in terms of stop losses and all that kind of stuff. So the 200-day, I'm sure, was a stop loss level for some people. They might have already gotten stopped out, or maybe they're still hanging in there. But in any event, the volume's just getting a little bit heavy there, so that might kind of indicate that we got some additional downside. Even though that's the case, like I said, we want to do what we can do with the information we have until we're proven otherwise. Let's see here where we are at. Let me get out of there. Okay, so the one thing I wanted to show you here, though, so like I said, the S&P has now touched and tested its 200-day moving average. The IWM, which is the Russell 2000. Need a cigarette. Okay, so the Russell 2000, I'm going to use IWM here, so it has also tested its 200-day moving average and actually fell quite a bit below it. I exited my put position while we were down here at the bottom. That worked out pretty well. But the thing that's kind of curious here to me is that, one, the Dow Jones, and we're going to use the Diamonds ETF to track that. It has still not touched its 200 days, so we still see $10 away from, or $11 or so away from that 200-day in the Dow, as well as the Nasdaq, and this is the Qs, which is a fund that tracks the Nasdaq or the Nasdaq index. Also, it has not quite got to that 200-day yet at 148 and change, so that's about $5 or $6 below us. I think that these other indexes here may come on down while the S&P and the IWM kind of bounce sideways, so that may take the next week or so to play out. I want to put this on the chart for you too, just because it's a little bit indicative of kind of the sentiment out there. Here we are. This is the options market for QQQ. You can see that today's volume is about 1.6 million contracts versus an average of 800,000. So there's a lot of interest there. It's a one call for every 2 puts being traded. Pretty much the average. We're starting to see above average open interest, and it's bearish, so that might be kind of indicating that people are a little bit nervous. But that being said, look at how this down here is actually a little bit of a bullish picture. People are willing to pay up for the calls and not so much for the puts. That's a good looking kind of setup from the options perspective, that maybe we're kind of getting to a capitulation point here in Qs. Also, let's go ahead and go back over to the other one, because they're all about the same setup here. IWM is a little bit less used than Qs or SPY, but even it is showing above average volume. Same setup, 3 puts for every 1 call, and we're now above the average open interest. But a lot of people are buying puts in the IWM simply because the mid caps are a little bit more prone to shocks than the bigger stable companies like the S&P and the diamonds. Yeah, it's fairly thinly traded compared to some of those other ones, but even it too is both the same situation. We are above average on today's volume, and we are above average open interest altogether. So, people coming in here buying some puts, a little bit more spent there. And if I'll show you some of these trades, and I want to go SPY because that one was a big one. Okay, so SPY. So this is just kind of the biggest trade so far today. When you see an option contract price, like right here, you see 22 cents. Oh, come on up here. There we go. You see right in here that we are looking at a 22 cent purchase price, or the prices that were purchased at right down through here. So in this case, this is a spread that got put on. It was, so here's the math for it. So the green means they bought this 277 call and then they sold these 283s. So that is a way to position themselves for an upward move but limit the risk. They pretty much paid 58 minus 22, so that's what, 38, 40 cents for this. Is that right? No, no, 46 cents. Shit, I don't know. I can't do math right now in my head that quick. Anyway, so they are looking for a little bit of an upward move, and since I'm just gonna do that real quick because that's bothering me. 36 cents. I'm sorry, guys. Anyway, so they paid 36 cents per share, so that since it's a 100 block share, they actually paid $36 per contract, and they bought 31,000 of them. So that was a $1.1 million bet that they just made. That'll pay out pretty much $2 million, I guess, or so if they end up being correct. Let's take a look at one other thing. And let me get out my drawing here. All right, and the transportation, that tends to be a leading indicator of the markets, and so I just kind of wanted to see where we're at with it in terms of have we hit, we did. We are almost at our 200-day moving average there, and so I do expect this one to kind of go on down there and touch that. But like I say, that may play out over the next week as the other indexes catch up with the SPY and the S&P 500 and the Russell 2000. I'm going to go ahead and cut this one short just because I wanted to show you what was going on with those index ETFs, and so I kind of have an idea of what to expect. But like I say, I think we're kind of getting to a point now. You start looking to buy this thing, like I said earlier. All right, guys, I'll talk to you here in just a few minutes.